Consistency is run by a bunch of investment bankers, and their modus operandi.
Welkom bij Morningstar. Mijn naam is Freddy Vermulligen. Ik zit hier vandaag met Oliver Kettlewell. Oliver is analist bij Morningstar en we praten over beleggen in de vastgoedsector. We voeren dit gesprek in het Engels. Oliver, welcome.
Thanks, Freddy.
Oliver, recent years have been difficult for the real estate sector, but where do you think the sector stands today in terms of an investment opportunity?
You're right, Freddie. It has been a difficult few years for the sector. It's been particularly adversely affected by the subprime mortgage mess in the US. Of course, it's had a particularly negative effect on a lot of real estate funds. If we look at the 3-year returns relative to the other Morningstar sector categories, it's actually performed among the worst. Even that's despite the rebound that we saw last year. But, you know, I think the long-term fundamentals remain favourable. If you look at sort of 6-year returns, they're average relative to the rest of our categories in the sector, and 10-year returns, they're second only to the energy sector. So I think that the long-term returns for this category of real estate actually do remain quite good.
So over the longer term, returns have been more favorable. What's underpinning these solid returns?
I think on the one hand, you've got the traditional factor of low correlation relative to equity funds and also to bond portfolios particularly. I think a second factor is it being a good inflation hedge. If investors believe that all of the money being pumped into the economy now by central bankers is going to lead to inflation, then real estate sector funds can be quite a good hedge for that. And I think a third factor is that traditionally real estate companies have been quite good dividend payers. You know, their whole setup is kind of aligned to making income producing through perhaps rents or so on and so forth. So you do have this also this dividend benefit as well. So there are some quite strong fundamentals underpinning the real estate sector, I think.
Basically, there are two ways to invest in real estate funds: direct property funds and indirect property funds. Perhaps it's good to illustrate the differences between the two.
Yeah, I think with direct real estate investment funds, you're basically real estate funds are investing directly in a property. They're purchasing property, so they're buying the bricks and mortar, the real building, if you like. And perhaps it's more of an intuitive way for investors at home to sort of think about the sector, because a lot of us do already have or have already purchased a house or an apartment. So in that sense, it's quite an easy way to think about investing in the sector.
And indirect property funds?
Yeah, indirect is the other way. I think indirect real estate investment funds, what they do is that they're investing in companies which then buy property. So it's kind of an indirect way of doing it. You're investing in companies that are listed on stock exchanges, on regulated stock exchanges. So in that sense, it does give a bit more liquidity compared to the direct real estate investment funds. And also I think that indirect real investment funds are a good way for investors to sort of gain exposure to the real estate sector through market returns which are similar to real estate, and through only purchasing perhaps small amounts into the fund. Traditionally, with direct real estate, you've maybe had to have a higher upfront payment, but with indirect real estate, you can invest in the real estate sector with relatively small amounts of money.
Okay. We have rated a number of real estate funds in the indirect category in the qualitative rating system. 3 funds of them are domiciled in the Netherlands, with the real estate fund from ING being rated as superior as of today.
Yeah, that's right. I think we do like the ING Global Real Estate Fund, and they also have a European Real Estate Fund. We like the approach that the two portfolio managers take to investing in the sector. Michael Liebsch and Andrei Antonovajevic, they create a very highly concentrated portfolio. It's a truly active portfolio, only 25 stocks in the portfolio. So you can see from that they're taking a very concentrated approach to the sector. Now, while obviously this does bring stock-specific risk, they try to mitigate this risk. They try to sort of restrict this risk by keeping the regional bets relative to the benchmark neutral, and they also keep subsector deviations quite small relative to the benchmark as well. So they're really trying to set their approach up So they're just looking at company bottom-up specific factors, such as low loan-to-value, so companies with a low debt. So I think this is quite a sensible approach, given it's just a two-man team, and the approach has served them quite well over the last few years.
We've also rated Robeco Property Fund and ORA Onroerend Goed Fonds. Despite the fact that these two funds have a standard rating, do you think these two funds could suit certain investors even probably better than ING?
Yeah, I think they could in fact suit some investors even more. The Robeco fund and the ORA funds, they have a much broader portfolio, so a much more a wider allocation to real estate. Usually the portfolios contain about 60 to 70 stocks, so that's about twice as much as the ING fund I just mentioned. And also with Robeco Property Equity and ORA Onroerend Goed Fonds, they take a more top-down approach to investing in real estate. So you're much more likely to see deviations on a regional level and also on a subsector level compared to the ING fund that I just talked about. If I can give you just a couple of examples with the ORA Onroerend Goed Fonds, the fund's managers have traditionally overweighted the US and they've underweighted Japan and the UK, whereas Robeco Property Equity has seen higher allocation to emerging market real estate and also the subsector of retail real estate. So these are examples of more sort of top-down thematic approach to real estate investing. So if investors wanted a more sort of top-down driven approach, then I would advise them to go for the Robeco or for the ORA Onroerend Goed Fonds in place of the ING fund.
Oliver, thank you. U bedankt voor het kijken. Meer informatie vindt u op onze website morningstar.nl over vastgoedfondsen en ook over andere fondsen. Dank u voor het kijken en tot de volgende keer.